very good afternoon, guys. Continuing with FM, today we start the next chapter, that is mutual funds. One of the most easiest as well as a very scoring chapter, mutual funds. The concept of mutual funds not only important from your syllabus point of view, but to be honest, very much important from practical life also. Mutual fund, to be honest, I am also a big fan of mutual fund investment, to be honest, and according to my opinion, every person should be investing in mutual fund with a long-term objective. There are many advantages of mutual fund. You'll come to know slowly what it is. Now listen, before we start, what exactly is mutual fund? Some of you might be aware, those who are not aware. Today, if I want to invest money, if I invest in bank gives me around 5 to 6% in the form of fixed deposit. If I invest, if I invest in stock market, I can get very good returns if I pick up good stocks. But in case my luck doesn't favor and I pick up bad stocks, I may lose money. So there is a risk also. I may earn very well, at the same time I may lose. So what to do? So what happens, most of the people, if you don't have time for doing research on investments, people give their money to mutual funds. Mutual fund is nothing but it is an intermediary who will take money from us and they will invest, they will do the research, they have a professional management team who does all the research and they will park our money in various types of investment. From there, they will earn and they will pass on the return to us. Of course, if you invest directly in stock market, you may get a higher return. But as I told you, there the chance of losing the money is also high. Therefore, mutual fund is one investment where you give your money to professional management people. They will decide where to put money and they will invest, get income, generate income and pass that income to you. Of course, it is their business, so some share of profit they will also keep. Now when I say mutual fund, now to be honest, what I am explaining in the next 4-5 minutes, not a part of the syllabus, but very important from practical life. When you invest in mutual funds now, it is not necessary that mutual fund investment goes in stock market only. It depends upon what type of investor you are. Some people, they want high returns, they are ready to take high risk. Some people, they don't want to take risks, they are satisfied with low returns. And some people, they want mixture. They are ready to take risk for a part of their funds, whereas some part of the funds, they want it to be safe. So depending upon what is the nature of the investor, what object the investor has to invest, because when somebody invests, everybody has a different objective of investment. Parents invest in the name of kids so that they can take care of their higher education cost or marriage. Senior citizen, people who are approaching the seniority age, they invest so that their retirement is taken care of. Parents also invest for, as I told you, marriage of the kids. So everybody has a different agenda, different objective to make investments. Mutual funds will help you achieving your each and every object. They have hundreds and thousands of plans. Whatever is your object of investing, according to that, your investment is made. Other than that, there are funds like income funds, growth fund. Income fund, what happens? Every year you get some part of income. And growth fund may, if you opt, you don't get income, but every year what is the income? It keeps on accumulating every year. So in growth fund, the net return of income is higher because you are not getting any income every year. You are just accumulating your income in your mutual funds. This is the basic concept of mutual fund. Of course, if I speak fully on mutual fund now, even 4 or 5 hours or less, Now let's come back to our syllabus. As I told you, one of the most scoring chapter, mutual funds. Now see, when we invest in debentures, when we invest in bonds, we have number of debentures, number of bonds. When we invest in shares, we have number of shares. Now when I say mutual funds, the unit is not mutual funds. When you invest in mutual funds, where shares may we call it as number of shares, here it is number of units. You can say the criteria is the same, but when you invest in mutual fund, you get X number of units. Say for example, today you want to invest 1 lakh rupee in a mutual fund. The value of that mutual fund per unit, we call it as NAV, net asset value. 95% of the sums of this chapter are based on calculation of net asset value. NAV, net asset value. Say for example, today the net asset value is 10 rupees. You are investing 1 lakh rupee. So what will happen? You give 1 lakh to mutual fund, value is 10, 1 lakh divided by 10, you will get 10,000 units. So you get 10,000 units every day. Every day the value of that unit's NAV keeps on changing. So your investment will keep on changing every day. Sometimes, not sometimes, majority times it will be upwards only, but in few cases it may go downwards if the markets are bad, if the government policy comes out which may have a temporary negative effect. But overall, mutual fund always gives you a good return. But remember, the object of investing in mutual fund, I'm talking from practical life, you should have a long-term horizon. If you say I want to invest today for 6 months, then you shouldn't be investing in mutual fund. You may get a high return, but in that 6 months if the market crashes, you may lose your money. So if somebody is interested in investing in mutual fund, the horizon has to be minimum 5 years. Invest today, don't look for the next 5 years. Automatically your investment starts growing. Also in practical life, there is something called as SIP. You all must be seeing in TV ads also. Systematic investment plan. Every month you put a fixed amount, 500, 100, 1000, 2000, 10,000, whatever is the capacity. Keep on putting it every month. Investment will keep on growing. As against SIP, I'm just giving the basic. There is something called as SWP. SWP means systematic withdrawal plan. You have invested for X purpose. When the time comes for which you need money, opt for SWP. Whatever you have invested, every month that money will come back to you with income. As I told you, people invest for retirement, for sponsoring higher education of kids, for marriage purpose. Invest when the time comes, take back the investment slowly, that is called as SWP. So there are thousands of things which are connected with mutual fund, and from practical point of view, I am again repeating, mutual fund is one of the best investments to be made, and according to me, every person should be having an investment in mutual funds. Okay, sure. Now coming back to the sums. As I told you, the main thing what you are supposed to do here is finding out the NAV. NAV is nothing but net asset value. Okay, so write this. Net asset value. NAV, net asset value. Okay. Now listen. As I told you, 95% of your syllabus you are supposed to calculate the net asset value per unit. Now, what do you mean by net asset value per unit? You all have done valuation of shares, intrinsic value method, which was also called as net asset value method. What we used to do? We used to get the value of net assets divided by the number of shares. As I told you, this is mutual fund. Mutual fund mein there is no shares, there are units. Okay, so what will be your NAV? So right there, net asset value per unit. Net asset value per unit is equal to net asset value of the scheme. Scheme means, as I told you, there are hundreds of schemes. Depending upon your object, the investment is made by the team of mutual funds. Okay, net asset value of the scheme divided by number of outstanding units. As I told you, this is like number of shares, but mutual fund may you get shares. Mutual fund may you get units. Shares may number of shares. Mutual fund may it is number of units. Okay, number of outstanding units they have to give you directly in the question. Now, what about net asset value of the scheme? Net asset will include all your assets, that is market value of investments, your cash and bank balance, other current assets, less your external liabilities. Okay, right here. Where, okay, just write it. Where net asset of the scheme, where net asset of the scheme will include, net asset of the scheme will include market value of scheme investments, market, write down, market value of scheme investments plus deposits, plus other current assets. When I say other current assets will also include cash and bank, but you just write other current assets less external liabilities. I repeat, net asset value of the scheme would include market value of investment schemes plus deposits plus other current assets minus external liabilities. Okay, now you all know this point very well. We have done earlier in couple of chapters. External liabilities doesn't include capital and reserve. Same thing applies here also. You all can just write a note. External liabilities, just a small note. External liabilities will not include capital and reserves. Capital and reserves. Okay guys, now coming back to your syllabus, the sums. Let's start. I'm starting with a pure basic sum. Okay? Come to the practical part. First question. Practical part, first question. Let's see. Market value of investments of ABC Mutual Fund Income Scheme is 25,72,825 as on 31st March 18. As against this, it has external liabilities of 517,250. Compute the net asset value of the units, assuming that there are in all 1 lakh units held under the scheme. Okay, so we have to get the net asset value per unit. Write down this formula. We'll repeat it again. First question. Net asset value per unit is equal to net asset value of the scheme divided by number of outstanding units. Okay. Now see, net asset value of the scheme would include your market investments plus other current assets and deposits. They have given you straight away. The market value of investment is 25 lakh 72,825. 25, 72, 875. Now see, any other assets? No. There is external liabilities. How much external liabilities? 517,250. So market value of investment is 25,72,825 minus 517,250 divided by the number of outstanding units, that is 1 lakh. Get the answer. 25,72,825 2055 575 divided by 1 lakh. So my net asset value, that is NAV per unit, is rupees 20.56. That means today if you invest in this particular scheme, you will be getting each unit at 20 rupee 56 paise. You invest 50,000 rupees, 50,000 divided by 20.56, that will be the number of units what you will get. Got it, guys? So this was the basic way to get your net asset value per unit. I repeat, market value of investments minus external liabilities, in this case, upon the number of units, so you get 20.56. Okay, now see guys, there's not exactly same sum. I don't want to waste time in that. Come to question number 19. If you see it is exactly same, you all can just try it at home. Okay, you have to just do this basic calculation. Let's not waste time. You all do it at home. Okay. Now come back to the first page again. Question number 2. Question number 2. Okay. Let's see. From the following information extracted from the records of Reliance Mutual Fund, calculate NAV. Amount is given in crores. Investment is there. Liabilities, debtors, other current assets, outstanding expenses, and number of outstanding units. Okay. Same way. Question number. Same formula. We just substitute the figure. Net asset value per unit is equal to net asset value of the scheme upon same number of outstanding units. Number of outstanding units. Now see what we do. What is the definition? Market value of your investments plus deposits plus other current assets. So add up all the assets. Now see, investment ka value is how much? 5514. Okay. So 5514 plus liabilities later on. Debtors is a part of current assets. So debtors 442 plus other current assets, that is 1286. Let's see, any other asset? No. There are two liabilities, so those two we will deduct. Minus 780 and minus outstanding expenses, that is 174. What you can do now? These are the two liabilities. So you can, if you want now, in brackets you add also, that is also fine, because ultimately from the total assets you have to deduct. Whichever way you do, it's fine. Upon number of units. How many units? 300 crores. Amount is in crores only, so units also will be in crores. Okay. So 5514 plus 442 plus 1286 gives you 7242 minus the total of liabilities 954 divided by 300. 5514 plus 442 plus 1286. 6288 divided by 300. Therefore, your NAV per unit is rupees 20.96. Okay. NAV per unit is 20.96. Okay. 6288 divided by 300. So if you invest, you get each unit at 20 rupee 96 paise. Okay guys, see again I'll discuss. Investments plus debtors plus your other current assets. From that, deduct liability, deduct outstanding expense and divide it by the number of units. Clear with this? Now listen. Again, I don't want to waste time. Exactly there is same sum with a different figure. Go back, see question number 20. Exactly same sum, just the figures are different. Do it at home. Same way you will do. Investment plus debtors plus other current assets. From that, deduct the total of liability and outstanding expenses, and that will give you your NAV per unit. Okay? Try it. Okay? I'll just be back with the next one. Okay guys, continuing further. We did the first two sums, now the third sum. Very simple sum. The only point is here number of units is not directly given. Let's see the sum. Miss Mansi is the manager of the following mutual fund scheme. Scheme size is given rupees 10 crores. Scheme size, that means the total amount of capital. Face value per unit 10 rupees. Market value of investment in quoted shares. Quoted means listed shares. Calculate the NAV. Okay, same formula. Now there is no information for any liability, no information for any asset. So your net asset value of the scheme here is nothing but your market value of investment in quoted shares, that is 25 crores. So 25 crores is the market value of the scheme. Upon 10 crores is the scheme size in rupees. What is my numerator I need? The numerator what I need is a number of outstanding units. I don't have units, but see, they have given us my scheme size is 10 crores and the face value is 10 rupee per unit. Okay, scheme size is 10 crores and the face value is 10 rupees. Therefore, my number of units will be 10 crores divided by 10. That will give you 1 crore. Okay, so 25 crores divided by 1 crore. Therefore, my NAV per unit will be rupees 25. Okay, therefore my NAV per unit is rupees 25. Got it? So the only point was to get the number of units. Again, not wasting time, you all can see behind question number 21. Try it at home exactly same way. Okay? It's the same thing, so I'm not wasting time in recording. Try question 21 exactly the same way. Okay? Now, again, next sum is very straightforward. You have to just add up the assets and assets and deduct the liabilities. Question number 4. Okay? Then after that, we'll take sums where you have to do little bit of calculation. Question number 4. Calculate NAV from the following information. Assets at market value 88 lakhs. Cash 2 lakhs. Receivables for security sold. You have sold and you are yet to receive the amount. So when something is receivable, that is a part of current assets, so other current assets. Dividend income receivable. Again receivable, so other current assets. So the first 4 are your assets. Liabilities, payable for securities purchased. You have purchased some securities for which the payment is yet to be made. Expenses payable, again it's a liability. Shares in issue 650. Shares in issue here means nothing but units. They have given the word shares, but it is number of units. Okay? So, same formula. Net asset value per unit is equal to net asset value of the scheme upon number of outstanding units. Okay? Now see, if you all want, when the number of items are more, instead of showing it in the form of equation, you can show it vertically A minus B. That is also fine, which in few sums we will have to do. But here it's okay, we can manage. So first what we'll do, 4 assets. Let's add up all the assets का value. 88 lakhs is my market value of assets plus cash, that is 2 lakhs, plus receivables for security 1,50,000, plus dividend receivable. As I told you, this is receivable, so assets. So these are my assets. From that, I will deduct the total of liabilities. Securities payable के लिए 3 lakh and other expenses 250. So minus 3 lakh, put a bracket, plus 250. Now listen, suppose you don't want to do like that, you can do like that also. Write these 4, minus 3 lakh minus 250, it's one and the same thing. Divide by the number of units, as I told you, it is 6,50,000. Okay, it is 6,50,000. So 88 lakhs plus 2 lakhs plus 150 plus 4 lakh, that is 95,50,000. From that, deduct the liability ka total, that is 550. Divided by the number of units, that is 650. So 90 lakh divided by 650 gives you 13.85. Therefore, my NAV per unit is 13.85. Got it? Similar to the earlier sum only. Add up all the assets and from that deduct the liabilities. Clear, guys? Now exactly same way again, you all can take question 23. Same way it is, do question 23 at home. Same thing, just different figures are given. Okay guys, now listen. We covered the introduction of mutual funds and we solved 4 sums, and 4 sums I have given you for practice. I'll continue further. Now in the next sums now, they have given you investment in shares where each share ka number of shares and the value what you have made is given. So we will have to calculate the total value and then get the NAV. Okay. So just there will be a little bit of extra calculation. All the calculations are basic. Okay. The important point will come after 2 sums. Right now, I'm just winding up the video and I'll be back with the next video.